told you one candle can completely change your life? You see, every candle is like a book telling a story, and there's so much information in every single candle, so much so that you can predict where price will go by simply just looking at one candle. To understand this topic further, we have to dive deeper in a term called liquidity. Liquidity is such a powerful topic because it's literally what makes the market move. Without liquidity, the market really wouldn't move that much. You see, these big banks and hedge funds need liquidity in order to enter their trade. Unlike you and me, these big firms are dealing with such huge amounts of money. They are dealing with so much money, there are simply not enough sellers for them to enter the trade at the price they want. So what do? They create the sellers themselves. Now, big firms have multiple ways to do this. One way is they create a scary narrative. Now, this might be a bit dramatic of an example, but you need to know how these big firms think. Another way these firms will drive down price before they enter is by hitting retail traders' stop losses. They will look at the chart, see where most traders have their stop losses, intentionally driving down the price to this area to hit all of these stop losses, which creates liquidity. Now, why am I telling you that? Because liquidity plays such an important role. And luckily for you, just like these big firms, we can take advantage of that. Here's how to do it. First, go to TradingView. I'll leave a link in the description if you don't yet have it. Go to your chart and click the daily time frame. You're going to want to find the market bias. This will usually be pretty easy to spot. For example, here the chart looks like this. You guessed it, we have a bullish buy. Here the chart looks like this. We have a bearish buy. Simple enough. It's not rocket science. That's the first step, finding the market buy. If we're overall bullish, we want to buy below the market open. If we're overall bearish, we want to sell above the market open. Here's what I mean. Make sure you're on the daily time frame. Find your bias, so here we are bullish. Then go to the latest candle and mark the open and the close of this candle. Next, go to a smaller time frame. These lines represent the open and the close on a higher time frame that we just marked. The green line is the open, the red line is the close. So if we are targeting liquidity, we only want to start looking for buys once price goes beneath this green line, giving us some sell side liquidity just like this. Next, we need some sort of confirmation that price is willing to reverse from this point. An easy way to do this is to mark a breakup structure. This will be the previous high before price gave us this sell side liquidity. Mark it on your chart and wait for price to come above this point. Next, we need a place to enter. My favorite way to do this is with a fair value gap. A fair value gap is a price jump that indicates an imbalance. You can mark this gap by finding the fast move, mark the candle before the move, and the candle after the move. This area is the fair value gap. Wait for price to come to this area. Enter here. Set your stop loss below this recent low and set your take profit at the market close we marked before. As you can see, it gives a great risk to reward ratio where we're only risking a little bit for a huge gain, which is exactly what we want. Wait for price to play out and boom, you got a super profitable trade. Here's a short example. First, go to the daily time frame. As you can see, we have a bearish bias. Good. Mark the open and the close of the latest candle. I want to let you guys know that I also share trade signals completely for free. For example, just recently, I called that Ethereum was about to break out, and just 2 days later, it shot up nearly 5%. If you want to see more of my trades live, join my free Telegram community. Link is in the description. Now, back to the strategy. Go to a smaller time frame. The green line is the open, the red line is the close. Since it's a red candle and we're shorting, it's reversed. Wait for price to break the market open. Next, mark our breakup structure, which is the latest low. Then wait for price to break this breakup structure to show it's changing momentum. Mark down your fair value gap. Wait for price to come to this fair value gap and to your short trade here. Set your stop loss above the market open. Set your take profit at the market close. And just like that, you got another winning trade. Try this strategy out yourself and let me know how it worked for you. I would love to hear you guys' product. Thanks for watching, and I'll see you guys next time.